Hello traders, Gary Fichardt here coming at you with the Forex Weekly Outlook. This week we've got a lot to look at. First, number one, the UK has gone into the 11-month Brexit negotiations with the EU. And the EU has already started demanding access to the UK waters. That's one, and we've seen the last probably 4 hours, 5 hours since the opening of the London session, we've seen a big bearish move on the British pound across the board. Now, it's not the only news that's coming out this week. We've also got the Aussie rate cut. We've got some New Zealand data. We've also got the non-farm payroll out this week as well, which is always a big number. Now, normally in the non-farm payroll week, we normally see the market moving a little slower during the first part of the week. But of course, with the news out with the pound, we've seen some big bearish move on the pound. In fact, we had a nice rally in Friday's trading. And then on Sunday Open, we saw that not really Sunday Open, but the London Open, we've seen all of that movement being given back to the news out in the UK. So let's go ahead and take a look and see all those data and put it together with the technicals and see how we set up technical. Because ultimately, traders, we're making decisions based on technical analysis, not just based on news. So I'll see you right after this. All right, welcome back, and yes, we are going to be taking a look at the technical analysis and see how we can line up the news with the fundamentals. The fundamentals with the technicals, because we want to make sure that the technicals are telling us what to do, and the fundamentals are supporting what we've seen on the technicals. All right, so with that being said, let's go ahead and take a look at the actual news out this week. So we've got a couple of data reports coming out this week. You see we have the cash rate. This is the Aussie cash rate. That's going to be on Monday at 10:30. Which is today, of course. Monday at 10:30, which is today. We don't have any sort of data out in between 10 a.m., which is the ISM manufacturing, up until, of course, the cash rate. So it's going to be real interesting to see what the Aussies do. We know that most central banks have kept their rates unchanged for most part of the last couple of months, just due to the fact that they want to go ahead and see things a little bit more stable in the global economy. Now, with them keeping the rates unchanged, we'll see how the market's going to move the technicals. We'll definitely take a look at the Aussie pairs this morning. Also, we've got out the New Zealand employment change and unemployment rate. We'll take a look and see that. To me, that's not going to be a big price mover. It may create some volatility, but it's not going to be a jump in the market. We also have the RBA Governor Lowe that speaks at 8:30 on Tuesday as well. But I think it comes down to the ADP numbers. ADP numbers on Wednesday is going to give us an indication of what the non-farm payroll is going to set the tone at. And as you can see right here, we do see that the ADP numbers are coming out on Wednesday, and then on Friday. Friday's a big number. We're seeing Friday's news. Non-farm payroll is expected to show 160,000 jobs, new jobs created. What is important to look at is the average earnings. That is the number that I'm going to keep my eye on over here, is the average earnings. And you can see right here, average earnings is not showing a good number. They expect the average earnings to rise to 0.3%. I was hoping for a little bit more of an uptick on that. So it is a good number, but I was hoping for a better number to come out. I must apologize. I am having a slight bit of a throat issue this morning, so just excuse me if I keep coughing now and then. All right, so average earnings is the number we look out for. We also got non-farm employment change. That's also something that will obviously create some sort of movement in the market, especially that number is much higher, much lower than what the forecast number is. And then the unemployment rate right here, that seems to be stable at 3.5%. So a bit of data coming out this week. And that data is certainly going to go ahead and affect the markets. We'll take a look and see how the technicals are set up. So we're going to look at the pound this morning, look at the pound crosses this morning to see what the outlook's going to be for this week. Look at the Aussie crosses because of the data coming out this evening with the rate decision. We'll take a look at a couple of New Zealand crosses, not too good to worry about that. And struggling here with my throat. And then we're going to go ahead and take a look at the US cross as well, due to non-farm payroll coming out this week as well. So with that being said, let's go ahead and jump in to the charts. All right, now while I'm doing that, I'm just going to grab this right here. This is the chart. We're going to we can start off with Aussie crosses first. I do have the Aussie Canadian open in front of me right now, and just make sure I drink a little bit of water just to make sure I don't choke on you guys. All right, so there we go. Aussie Canadian. Now, what are we expecting out for the Aussie Canadian this week? We say that we're expecting Aussie CAD to possibly show some sort of reaction due to the rate decision this evening. If the rate decision is staying unchanged at 0.75%, then it's going to come back down to the statement. Now, anytime they keep the rates unchanged, it normally sets up a positive reaction to the market. Now, we've seen over the last 24 hours, price has been slightly bullish. If you see right here, take a look at the gauge right here. We are seeing a slight, not much, a slight bullish move on the Aussie. Now, look at the Canadian. Canadians are strong too. So there's a fight between Aussies and the CADs. And this is why we've seen a little bit of an upside move right here, and a very slight upside move in the Aussie CAD over those last 24 hours. Now, the data this evening will certainly go ahead and help the rally and push the rally a little bit higher up if the news is as good as what we think it's going to be, and keeping the rates unchanged. Well, it comes back down to is the market demanding a rate cut? Is the market demanding them to keep the rates unchanged? That'll always come back down to the statement, because the data in the statement will reflect whether they've made the right decision. And that means that, do we have good jobs? Do we have good housing numbers? Is the inflation number exactly where they needed to be? Or are we in a situation where inflation is in the increase, and they may start thinking about increasing rates, or they have to start thinking about increasing rates? Those numbers will come out in the statement. At least that will be disclosed there. Now, if we take a look at the technicals on the Aussie CAD right here tells us that markets come back down to a support level, not quite hitting that support level. But I also look at this level right here. This level to me is important there. Okay, and that's not a very straight line. So let me see if I can get a straight line right here and show you. All right, there it is there. You see how price moved just above. See how price moved above and closed up right about this level right here? Well, we've seen price do the same here in a nice bullish candlestick formation. Now, this candle is not closed out yet, but by the close of today, if we close that back above this level at 88.66, that would mean that price is actually found a bit of support right here from that level there. That means that we can see price moving back up to retest resistance, which is this level right here. And if we trade back inside resistance, then we're looking for price to move back up all the way up here to the top. So we could definitely see some upside movement in Aussie CAD, especially if we do get the good numbers coming out this evening at 10:30. So watch out for the numbers at 10:30 this evening. And then connected with the technicals. It's got another Aussie cross right here. This is Aussie Swiss franc. And let's see if we've seen the same thing. No, we're not. All right, so I've got my actual data that's updated a little bit better now. So now you can see there you can see we've got a much stronger Aussie than we do with Canadian. And that's the reason why we saw Aussie CAD being a little more bullish than a bearish. All right, because we've got a bigger push on Aussie. So the Aussies are stronger this in the last 24 hours. And you can see even with against the Swissy right here, we've seen a stronger Aussie to Swiss, and this is why we've seen now a little bit of a rally on this as well. All right, so but the problem here is, traders, do we find ourselves at a level of support and resistance that we can anticipate price to want to move up or move down? Well, you see here from the previous low right here, this was the Swiss flash crash that we had right here, and that was a flash crash low. And as you go across right here, you can see the price came not once there, but now this is the second time it's testing that level. So this is very key right here. In fact, let me go ahead and draw in a line from the low there, and that will be close enough. Let me see if I can get it closer. There we go. All right, so there's the low right here. So which means that now I always see price is not a defined level, but an area, and so therefore we should be able to come back to at least retest that level. So we're looking for about another, let's see here, another 83 pip rally. If it manages to stay above that, then we could go all the way up towards this level right here, which is around about 206 pips to the upside. Now, I'm not saying let's go ahead and try and pick the bottom. So, certainly not saying that. But I am saying that we did break out of this consolidation. I'm going to go ahead and actually put some fibs here from that high to this low right here. We see price came back down, hit the 1.618 right here. We had a slight bit of pullback, creating another move, and then price is now gone to the 127. So why am I looking at this level? Why is that important to me? Well, that level is important to me because when price comes up to the 127 in a 5-wave sequence, I'm expecting it to go ahead and take out wave 4. This is going to be wave 4 right here. All right? So I'm expecting price to want to go ahead and probably work his way up to this level, bounce off that level, push back down, and then trade back up above it, going to this level right here. Now, we also said that there's going to be resistance here. So price may go ahead and extend past that, hit that level, and then come back down to retest that. Now, if this is going to be a very strong level of support right here, banks are going to keep price above that and keep pushing it back up again. So this level right here is important to monitor. What is that level? All right. Now, don't remember, it's not a level that we should be paying attention to. It is the area around the level, right? And so let's go ahead and take a look here, and I'm going to pull up. I'm going to say strong support, because it was strong support. It may be strong resistance right now, or maybe resistance right now, but it definitely is a strong level of support at 65.34. Remember, don't pay attention just to that number. It's an area. So around about this area is where traders need to be a little more aware of what's going on in the market, right? Don't react if price trades above that. Don't react if price trades below that. Rather wait for a clean break to either side. Now, so we're expecting a little bit of Aussie movement to the upside, so which means that Aussie Swiss should be rallying and taking out, or at least retesting 34, which I think it was at 85 pip rally, yeah, around about there. All right, so that's on the Aussie Swiss franc. Go to Aussie JPY. Aussie JPY right here, looks like we did also break through support there. But again, like all the Aussie crosses across the board, we may be expecting a little bit of a rally in Aussie. Now, I'm not saying that the data this morning, this evening, is going to create that rally for us. But what I am saying is that due to the fact that we do have this Aussie data coming out this evening, and we're now looking at the technicals are telling us that we're expecting some sort of bounce in Aussie. So which means a stronger Aussie move. And the fact that we do have the data coming out this evening with rate decision makes me believe that this could be the reason why we could see that rally taking place. The market may see an unrate change, and hey, who knows? Who knows what the news is going to tell us? But what we do know is that whatever the news is going to report is going to show us some positive reaction to the market. Because sometimes traders, when we look at the news and we look at a report in the news and it comes out, we look at that and we go, well, that should have been a bullish move on the Aussie, or it should be a bearish move on the Aussie, right? And the market reacts a little differently. And this is the reason why we need to pay a little more attention to the technicals, because the technicals are the ones that are going to be able to support what we've seen on the fundamentals. And if I don't see a correlation, I don't see a correlation between support, or at least the news, and the technicals, then most times it's time to stand aside and wait for some better confirmation. All right, check this out. Here's the Aussie JPY. Seeing the same thing here on the Aussie JPY. Look at the price to work his way back up to this bit of support right here. Again, looking for a bullish rally in Aussie. All right. And if we do get that bullish rally in Aussie, then this could be just a temporary retracement before we start seeing the dip back down, further down south. I'm not saying that we may not see the Aussie JPY go further down south. I'm just saying right now we may see some short-term recovery in the Aussie dollar before we may see a further move down on the downside. Aussie New Zealand dollar, we've seen Aussie New Zealand dollar range bound for the most part, and we've been talking about Aussie New Zealand dollar moving up towards the top of the range up here at the top. Right, we are range bound. It's testing the support again. We're just waiting. It's just a matter of time before Aussie New Zealand dollar makes its move all the way to the upside. Now you can see right here, both Aussie and New Zealand dollar are both fairly strong. Okay, which means sideways. All right, but it could also mean that if one of the pairs or one of the currencies are moving stronger, or if it gets better news out, we may end up pushing a little bit higher. Right, so at the moment right now, we did gap a little bit to the downside at the open of Sunday, but it has gone ahead and rallied up most part. And it's not been a lot. I mean, if you look at the open and close right here, or even the high and low, take a look at the high and low right here. We're talking about maybe 54 pips. So 54 pip move so far today, which is not a lot considering, the daily trading range is 44 pips. So, it has gone a little bit more than the daily trading range. We have moved from a high to a low, or from a low to a high, gone 56 pips, with the daily trading range being 44. So we've exceeded the daily trading range for the day. So not a lot of action expected still this morning, but we'll keep an eye on the rest of the week and see if we start seeing that rally taking place. Aussie US dollar, last Aussie cross right here. We've seen some weakness down towards support. Now, again, expecting some strong Aussie news that's going to help drive it back up again. Again, this may be a temporary move. All right, I'm not expecting a long-term move on this, but if we get a temporary move to the downside, okay, to the upside, we get a temporary move to the upside, we may still see price want to move further down south inside this previous downward channel. And so if I look at the market right here, I'm probably going to have to go ahead and pull in some trend lines right here, just get an indication of what's going on right here. If I do that, then we can see that this is the channel that's now created. All right, that's the new channel that's created. So while we're at the bottom of the channel, there's two reasons why you probably want to start thinking bullish on Aussie US dollar. One reason is that we found the backside of this old trend line right here. There it is there. But also at the same time, as price has gone ahead and moved down, we've extended past what we expected to be our target. If you take a look over here, if I go ahead and adjust this trend line right here to that low, you can see that we expected price to stall here, but it's gone through that level there. So which means that we are oversold right now on Aussie US dollar. Expecting Aussie US dollar to start moving back up, even if it just means coming back up to the backside of the trend line. So any sort of selling that you've had on Aussie US dollar, profit taking may be a good thing, maybe at least scaling out of your position as price starts moving back up a little bit higher, right? So watch out for that. Now, let's go ahead and take a look at the dollar index, because we're now going to move to the dollar crosses. See, dollar's moved up a little bit. It's gone ahead and rallied over the last 24 hours. We've seen a nice little rally in the dollar. It started working its way back down, but could this rally just be a correction move as it's starting to work into its A, B move before moving to C? Now, we've been talking about the dollar index for some time, And we did say that dollar index is maybe expecting a little bit of a dip, right, before the rally takes place, before a big drop in dollar. So we're in that what we call a corrective move, which is an ABC correction move. And so this little bit of downside bearish movement in the dollar is anticipated before the rally takes place. Now, again, could this move that we're seeing right here, could this be just a correction move? And what do we mean by that? Well, if you actually go to a lower time frame, I'll pull up a 1 hour right here. If you go to a 1 hour time frame, this is what we're saying. We're saying that price moves in waves, right? And what we're looking for right here is price to do this. And then go ahead and correct. So could this be our bearish cycle? And now we're in a correction move before price moves down again to complete that big B that we said. And then when it hits B, then it's going to go ahead and rally up to hit that C. And then when we hit C, we're going to go ahead and sell off big time. All right? That's possible. Okay? So don't get bored up, but don't get caught up in this strong dollar rally that we've seen right here, because this may just be temporary before price moves back down south. Take a look right here. We'll see it in the backside of the trend line. Okay? So the trends are indicating that this may be just a temporary hold right here before we see price moving further down south. So don't get caught up in strong dollar. This may just be a correction move, and I think we're done. All right, I think the correction move may be done. All right, so look for a turnaround to the downside in dollar. Now, if we do see a turnaround to the downside in dollar, guess what? Aussie US dollar is going to rally. All right, so strong Aussie, weak US dollar. Aussie US dollar will rally. So check out for that and make sure that you pay attention to the details. All right, now that we're on the Aussie crosses, I'm going to go ahead and move to a pair that we're going to be looking at this morning, which is going to be pound US dollar. All right, so we've got pound US dollar. So keep that in mind. All right, just like I said, pound US dollar. What did I say about the US pair? I said US is going to weaken, right? And if we can see a weaker US dollar, then we may see pound rally. Pound US dollar may rally. Now, we've just seen over the last 24 hours, in fact, it's been around about 3 o'clock this morning, 3 o'clock Eastern Standard Time, when the UK trading session opened up, we started seeing pound fall due to the fact that we had that news came out about the UN demanding access to the UK waters. This is part of the trade agreement, and in fact they said there won't be a trade agreement if we don't have access to the UK waters, which is obviously the first step to the 11-month negotiation with the EU with the UK with UK. So let's go take a look at a couple of things here. If we're looking at the daily chart right here, daily chart tells me that this is just another correction move right here. All right, it means that pound could be just a little bit range bound right now. It's had its rallies in last week. Now it's a correction move. Sure, the correction move has been stronger than the move that we had on Friday, which was always concerning. But we're going to have to see if it holds up above this trend line. If we hold back above this trend line, we should still continue the rally going up here to the upside. All right. This may just be, a little bit of concern for the market, but I know that the UK does want to negotiate, do want to get a good deal on the table with the UN, and so this may just be just like we've had with all the other trade agreements, right? Think about all the other trade agreements with the US against China, against the UK, against Canada, against Mexico. All of the times, every time we start with some trade agreements, we start seeing a lot of volatility in the market. All right, the market's jumping back and forth, because who's reacting to the news? People are reacting, and so this is just people getting a little jitty and nervous and excited about what's going on, and so price is going to move back and forth just because we start seeing the emotions of people reacting in the market, right? And so we're going to realize that we just need to stand firm and make sure that we stick to what we've seen on the charts, all right? And at the moment right now, the charts aren't telling us to go ahead and sell off. So don't go ahead and say, well, now it's time to sell off. Now, I get it, traders. There may be traders that are taking on some short-term opportunities, intraday trades, and quickly making some profits on ups and downs, and that's fine. But if you look at the long-term outlook or the mid-term outlook, we're still bullish on pound US dollar. And that's not just on pound US dollar. It's across the board. Check out the pound Aussie right here. Pound Aussie did hit a bit of resistance up here at the top. Ooh, that's nice. Hit a bit of resistance over here at the top. Oh, my bad. There it is. Hit resistance at the top right here. And after hitting that resistance, it's starting to push off that resistance. So we're also in a corrective move. All right. We didn't quite get to the top of the channel, which means that we still got some movement to the upside. So any sort of movement that we're seeing right now on the pound, and this could be a 489 pip dip before we start seeing the rally take place again, which should give us another 1,035 pips. So this is, you're going to see a lot of these type of movements in the pound crosses, right? It's just going to be what it is over the next 11 months as the UK and the UN negotiate the trade agreement. We are going to see this type of action. Okay, so this is not unexpected. So expect a bearish move on pound Aussie, just a short-term bearish move on pound Aussie before we start rallying. Let's go to pound Canadian. Same thing with pound Canadian. You can see that we came back into the channel. I'm not going to make an adjustment to this channel because we haven't taken out the highs yet, but we're expecting price to go all the way up to the top right here, right? All the way up here to about 179.82 and change. So this is just rally, correction, then rally again. All right, so this is just part of the bullish move that we've seen, or the bullish channel we've seen. You know, this type of action is expected. So nothing to be concerned about, but certainly going to go ahead and hold long on Aussie CAD as well. Pound JPY. So that was the pound CAD. Yeah, pound CAD. Now pound JPY right here. Pound JPY is set up a little different. Take a look right here. Actually, I need to go ahead and zoom in so I can see exactly where our levels are. There it is. So let me go ahead and get that trend line back. All right, there it is. So if you go ahead and place the trend line in over here, you can see that we're testing the trend line. So, and I would say that we have consolidation right here. We're certainly still inside consolidation. We haven't really got out of consolidation. It's been back and forth right here, but you can see we're still a bit inside consolidation, and we're still at the support level of consolidation. So which means, traders, that again, this reaction in the market that we've had today is nothing we need to be too concerned about. But if you are looking at short-term opportunities and picked up a sell on some of your trades, maybe time to start looking for that support level to get the heck out of Dodge. And the reason for that is because we're still expecting price to move back up north. All right, we're still expecting price to move back up north. We're expecting price to go ahead and continue to rally up here to the top. All right, so this is what we're expecting. And that's on pound JPY. Pound Swiss franc. Let's see here. Same thing. We're actually still inside consolidation. In fact, we picked up a butterfly pattern right here. We're expecting price to move up a little higher up. Yep, just move up a little higher up. We're looking for price to move up to around about this level, about 130. So pound Swiss franc is also range bound at the moment right now. And we're expecting price to move back up. Again, I wouldn't be too concerned about this big bearish move that we've seen right here. Sure, it's a good way to take some trading opportunities and some short-term trading opportunities. But let's take a look at the actual overall channel. And you see, this is very important for me. All right. When I see price trading below and trading above right here, this to me is no trade zone. Right? This means that I need to get some better confirmation of what's going on right here. Now, what I'd like to see is price move its way back up to the backside of the trend line right here. I would possibly go ahead and start looking to sell at that point, all right? But I cannot do anything with a currency pair that sits in a range like it is right here, all right? If it was in a channel, all right, if it was in the channel right here and it was at support, I could still buy at the support level right here. But with it being inside this no trade zone right here, which means it's not in an up channel, it's not in a down channel, so it's in no man's land, it's best to stand aside on this. So pound Swiss franc, I'm not really cared too much about pound Swiss franc. I do see the range, but I'm not really worried about trading this pair at all until I start seeing some more, better structure in place. Pound New Zealand dollar. Now, pound New Zealand dollar's gone ahead and tested the top of the range right here. We've seen a nice little bearish candlestick. Now, I would certainly go ahead and look at this as now the top of the range here and see price want to come back down to hit support again. Now, as you can see right here, we're actually a little range bound on pound New Zealand dollar. Hit a lot of resistance at the top here. Got a lot of resistance at the top here. And without seeing a stronger New Zealand, weaker pound, this could push us bearish and could push us back down below, down to the support right here. Now, that's a long ways to go. And we've got a long ways to go before we even get to that point where we decide that price is going to move down to there. Because that is what? Let's take a look right here. That's a 2,000 pip move to the downside. We're just testing the top of the range. So I think in the short term, yeah, let's look for some bearish movement in pound New Zealand dollar. Look for pound New Zealand dollar to come back down to support again and then work its way back up to that resistance. All right. So again, just slight bit of retracement on the pound, but I think pound should continue to be bullish overall. And then we've spoken about pound US dollar. And then the last currency pair that I want to go ahead and take a look at right here is actually the New Zealand US dollar. And the reason why I want to look at the the New Zealand US dollar right here is because traders, there's two things that are happening this week. We've got some data coming out for the New Zealand dollar. There it is right here. We've got employment change, quarterly data. That's the only reason why I'm really paying attention to this, because this is quarterly data. We've got unemployment rate. That seems to be stable at 4.2%. But, and trust me, we'd like to see that tick down as well. That's not a good rate to be at. It's 4.2%. It's high. But we want to see, of course, a little change in the employment change right here, the quarterly data. We want to see that show a little positive. Now, if we do get some positive news coming out of New Zealand, it's going to help drive this pair back up to resistance. And that's why I said, even though we've seen a little slight bullishness over the last 24 hours on the New Zealand dollar, I do expect New Zealand to rally up. Now, that news is expected out on Tuesday, all right, around about 4:45. And I'm expecting price to work his way back up north. So expect a short-term rally on the New Zealand dollar, also because of the fact that over the next couple of days, all right, Wednesday, Thursday, and Friday, as we head into non-farm payroll, all right, we've already anticipated that the dollar index is expecting to see what? A bearish move, right? We said that the dollar index technically is set up to see a bearish move. Now, that's not considering any of the news that's coming up, right? On Wednesday, we have ADP numbers coming out. Then on Friday, we've got the non-farm payroll that's coming out as well. And it looks like the numbers over there doesn't look like it's going to be too exciting, all right? So, if the technicals are right, and we do see some further movement, bearish movement in the dollar index, then that means that the New Zealand US dollar will continue rallying. And that means that not only are we going to see the rally in the New Zealand dollar take place tomorrow, that may just start setting the pace, but as we get towards the end of the week, we may be at a high and maybe even retesting the backside of the trend line before price starts working its way back down south. Listen here, traders, we've got a lot of news out this week, but I certainly feel that the technicals are being supported by the fundamentals. There's definitely a correlation between the two. I think what the most important thing that we need to do this week is that we need to pay attention to exactly how we're going to trade the markets. Whether the markets are going to give us opportunities to trade it or stand aside. Now, don't be that trader, all right? Don't be that trader that if the news is going to be conflicting to what we've seen on the technicals, or if the technicals aren't lined up at a good support level or a good resistance level, then just simply stand aside, and you want to get confirmation at that as well. So make sure, traders, that you have things lined up before reacting, right? Although it says great news out that's going to support the technicals, we still need the technicals to line up at the levels that we need to be able to trade them, because if you don't have them at the right places, then what you're going to do is you're going to keep chasing after price, and you don't want to do that, because what happens? You burn, all right? Because when you chase after price, you most inevitably get in at a very expensive level. And what I say about expensive is that if you're buying or looking to buy and price rallies up 100 pips and now you're looking to get in, that is in most cases a place where price is going to correct against you first and cost you emotions, maybe even some money, all right, before it starts heading back up north, all right? So making sure that you're getting in at the right price is important, all right? And the best price to get in at support or resistance, all right? And if you're using systems to get in on trades, all right, and which I do, I may deploy my system bullish or bearish based on that support and resistance. Then make sure that that system has the right conditions to get you into the trade when we start seeing volume, momentum move in that direction as well. All right, traders, it's going to be a great week. A lot of good things happening this week with regards to news and technicals. Hope you have a good week, and we'll see you next time. It's Big Dog signing off.